Everyone's heard it. If your credit isn't perfect, you'll never qualify for big business loans. That's the lie. The real playbook used by top performing companies? Credit is a tool, one you can engineer, expand, and strategically deploy. Here's how the smartest founders rewrite the rules and unlock funding most businesses never touch. Secret number 1, pros exploit the dual credit hack by maximizing both personal and business credit profiles. According to Federal Reserve data, low credit risk borrowers are nearly twice as likely to secure large loans at banks and finance companies. But here's what sets winning companies apart. They don't stop at personal credit. They rigorously build business credit, registering their entity, obtaining a DUNS number, and methodically using business credit cards to establish payment history. Case in point, a tech startup in Austin leveraged a strong business credit score, not just the founder's personal score, to secure a $1.5 million line of credit despite only 2 years in operation. The dual credit approach positions your company for bigger, faster approvals. Secret 2. Elite founders leverage strategic debt stacking. Rather than applying for a single massive loan, they layer multiple smaller credit lines from different lenders, banks, online lenders, and even equipment financiers. Why? Data shows that businesses with 3 or more active credit facilities are 47% more likely to be approved for large loans later because lenders view them as experienced, lower-risk borrowers. A manufacturing company in Ohio used this method, stacking an SBA microloan, a business credit card, and a short-term online loan to build their credit profile over 18 months. When expansion time came, they landed a $3 million SBA 7A loan, something they never could have secured as a first-time applicant. Secret 3, the insider's master guarantee arbitrage. Top-performing companies don't always pledge personal assets for big loans. Instead, they use outside guarantees like bringing in a creditworthy partner or parent company as a guarantor. This reduces the lender's risk and dramatically increases the approved amount. In one standout case, a food distributor out of Chicago brought on a minority investor who agreed to guarantee part of a $2 million loan. The investor's strong credit and balance sheet tipped the decision, letting the business triple its warehouse space without ever risking the founder's home. This is the secret sauce for unlocking 7-figure funding even before your business hits maturity. Imagine you're building a bridge across a canyon. Most founders stand on one side, staring into the void, thinking their personal credit is all they have. But the pros? They lay planks from both sides, personal and business credit, meeting in the middle. Then they reinforce the bridge with side cables, multiple smaller loans layered for strength, and when the gap is too wide, they call in a partner with a longer plank, a guarantor, who helps complete the connection. The result? While others hesitate, worried the bridge will collapse, these founders drive truckloads of capital across, fueling explosive growth. Stop thinking of your credit as a wall between you and funding. Start seeing it as an expandable bridge you can engineer, reinforce, and extend with the right materials and allies. Now here's the power punch stat. According to recent lending data, companies that systematically build business credit, utilize multiple credit facilities, and leverage outside guarantees are approved for business loans up to 12 times larger than those relying solely on personal credit. That's not a rounding error. That's the difference between a $250,000 loan and a $3 million capital infusion. This is the delta that turns small players into market leaders. So what's the bottom line? The old playbook, wait, hope, and pray your personal credits is enough, keeps most businesses stuck in the minor leagues. The new playbook, used by the fastest scaling companies, is about engineering your credit ecosystem. Build business credit as aggressively as you protect your personal score. Stack credit lines to demonstrate financial sophistication and reliability. And don't be afraid to bring in outside partners as guarantors to turbocharge your borrowing power. Winning companies know that lenders want to say yes to confident, prepared borrowers. They present a robust, diversified credit profile backed by data, reinforced by experience, and supported by strategic partners. Every move is deliberate, every relationship is leveraged. This is not about gaming the system, it's about understanding how the top 1% play the game and then executing with precision. The best founders don't wait for perfect credit, they manufacture it. They're relentless about tracking their scores, disputing errors, and building payment histories with vendors and suppliers. They register with business credit bureaus, use business credit cards wisely, and always separate personal and business finances. When it's time to scale, they have a story to tell and the data to back it up. If your business is ready for real growth, stop playing defense with your credit. Start playing offense. Build, stack, and guarantee your way into the big leagues because the money is out there waiting for founders who know how to unlock it. The only question is your business ready to play like a pro?